Welcome to TradeTheMBI.com. This is Jonas Report is for Friday the 13th. The excitement, day before I get another year older. Oh, mamma mia. But market, still caught right in between here. So we pushed up against the 100%, came back down. The MBI Magenta wasn't able to sustain its move back over uh, the MBI yellow here, and actually we started to see a bit of a short increase. That crossover of the MBI white shorts over red, usually a negative signal there, so we might expect a little bit more back and forth. Not surprising given this point, but you can see we had a quick spider there where DOC spread started again. So, and this, relatively showed up on intraday a little bit better. Um, Overall, I think there's still just a whole lot of uncertainty as to, this idea that the Fed is going to continue to cut. Inflation still isn't under control. Oil is not under control in any way, shape, or form, at least from a price elevation standpoint. So, there's a lot of happy talk, and that's great. But at the end of the day, it's been the Nasdaq that's been holding things where they are. Of course, you had Trump at the New York Stock Exchange the other day. The big excitement of that, ringing the bell, being named Man of the Year, kind of thing. But it's interesting because when you do look at the NQ here, you still see cyan completely reset. So the powder for a move upward is there. What we'll be looking for is this to continue. If it goes below negative 13, that would be a far greater negative. But there it is right there. That rising gold in the shakeout is an indication that we're likely to stay at least up in these levels, if not move higher. So any selling's likely to be modest. Of course, the Treasury fake out, was just that. At the end of the day, you're going to have a situation where, in order to entice people to buy treasuries for the massive debt, they're going to want a return. Otherwise, you're forced into the market, and uh, there's just no other way around that. And there isn't any normalization yet. So until that takes place, the market is really the only choice. So now then the question becomes, what do you want to be in? If you're talking about tariffs and all that kind of trade, which there isn't any question that that stuff's coming. Now, will some of it be negotiation? Of course, Biden, he's not doing anything at this particular stage, so things are sort of on autopilot. But, Trump has invited Xi from China to his inauguration. He's trying to do the talk loudly but carry a small stick, the opposite of Teddy Roosevelt or some other version like that. But the whole threatening the big game. uh, this is what we talked about before. You got to have to ignore a lot of that stuff and wait for the actual results. The market, however, is not going to do that. The market is going to react on rumor and then trade on the news. So here you have oil, though, still over that 70 plus range. That's still way out of line for any kind of real relief from an economic standpoint or a boom standpoint. How quickly things will transition as soon as he comes in. Oh, that's going to be an interesting one because that will be the driving force as to where we go from there. And the potentials for the upside of it are fantastic, but not there yet. And how much resistance is going to be applied, tough to say. The real interesting one is the geopolitical, because here you have Europe, and this nightmare of the euro is problematic, and that's going to be a significant factor going forward, whether they can keep some of these things alive from collapsing. I mean, it's hard to underscore how important and difficult it is for people to grasp the idea that government spending is not a great thing for economies, and you're starting to see that devolving in the European model, because at the end of the day, you're spending lots of dollars, or in this case, euros, for very little return because it's an unproductive way to utilize resources. And that just continues to drive things down. They all say, oh, well, bringing in migrants and then giving them aid and that, is a boost for the economy. Not really. It's an overall drain, always has been. Any suggestion otherwise is just made up numbers, because at the end of the day, if you're not producing goods and services, you're not growing your economy. And by just trying to fill up large corporations by just transferring money back to them via handouts and that, it's not an effective way. It goes back to my whole argument with pandemics and everything else. When you're giving out air money to airlines and that, and not actually just giving the tickets to individuals, or for that matter, helping them pay mortgages versus just giving banks large amounts of money, you don't actually create any movement. And without that movement of actual economic activity, you're just this is what happens. This is why the deficits and that continue to balloon, because you're always going to be paying more to get less return, which is why the GDP numbers are never really that good. At the end of the day, energy, making it cheap, affordable, or even really inexpensive, will drive growth. Plain and simple. Now, there's a lot of people who don't want that. Well, okay, but the devaluation is clear. You look at gold here and where it has come from to where it is, and it's not going to stop as long as you maintain that kind of spending unrelated to positive economic growth. And you can fudge the numbers all you want, but at the end of the day, the reality comes home, and this is why you have Bitcoin where it is. It's plain and simple, not hard to really, grasp the concept of it. As we get into the next days or whatever, I'll start to get into a deeper dive into some of these broader concepts and show where it will reflect in the charts, and how we'll be able to see the pending outcome of it, because when you look at it from a situation in the euro and that, these kinds of contagion situations, whether it be China or otherwise, can really have broad ripple effects. And nobody's really insulated from that. They will have a serious impact, and that doesn't even take into account the idea of global conflict and those kinds of things. Though I think that the potential tensions that exist right now are probably very frightening, given where we're at. That's a whole different topic. But when we look at it here from the 5K, so every time we get our little MBI weight pops, we expect that from 100% at least to return to the 50. Got that, happened again, did the same thing, got another one, got the same thing, but then we ended up with the MBI white leading when we got below the 50%, and that is that call to the zero, and that's exactly what took place there, and we've had a continuation of that. So that's all pretty clean. I don't think there's any surprise with any of that. When we look at what's happening here in the European session, it's all rosy, looking good for now. These ideas of rate cuts in the EU and that it's not going to matter. Their model is dead and it's going to collapse. It's just a question of managing how that happens and being prepared for it. And there's opportunities with that. Because there's a trade to be made. So we'll keep investigating all of these things and explore them and point out how they appear on our charts, so that we'll be able to have a real clear path going forward into the new year. As always, though, anything relevant, I'll put it on the Skype chat. Have a great trade. Talk again later. Anything relevant, definitely put it on that Skype chat. But I think everything's pretty clean so far. Have a good one.